Welcome back to another episode of Fund Friday with an absolute rock star in the capital raising sector, fund management world. We've got the one and only Sarah Miskelly, the founder of Hylee Capital. How are you today?
I'm great. What an intro.
Well, I've got a very distinguished guest, so I got to make sure I put the proper respect on the name.
There you go.
Yeah. Well, thank you so much for coming on, the podcast today. You've had a very, very great start to your commercial real, or I guess your capital raising career and kind of the stuff that you've been involved in there. I know many of the people that you work with all say great things about you, and you're kind of very, very much so in the space, whether it be in the LinkedIn world and stuff like that. But Sarah, let's learn a little bit more about your backstory and kind of origins there, if you will, and how you got to where you are today.
Yeah, for sure. Appreciate that. And, I'm kind of lucky in a sense. I grew up in real estate. I had a background where when I was, born and raised in multifamily, property management. So my family started a portfolio in Toronto, Canada, where I'm originally from. And I still own those assets. We still have tenants in them. So I had a really great start in understanding the dynamics of real estate and really the value add it adds to a family in what I saw in our experiences as a family, where summers were off in Croatia because we had cash flow to help pay for it. So that was kind of where things started, and then I got into real estate sales because I wanted to kind of broaden my knowledge base in this area, and did very well in real estate sales. But then from there, once family started to become a conversation, being a real estate broker became a little bit more of a challenge. It was a 7-day work week, very heavy lift. The money was amazing, but a very heavy lift. And I'd actually been LP investing as well, in hands-off real estate deals. I started in private lending when I was around 18 or 20. And I really loved, that somebody helped me learn about those deals. So it was kind of a natural progression to get into the fund management space where I'm able to, help people access really top tier institutional grade assets. And I'll be very honest with my experience as an LP myself and the mistakes I made when I got started, or not having access to quality deals. I really put that into my processes now to ensure that, I'm risk mitigating for my investors as much as possible, because I didn't have that benefit when I got started very young. So now, yes, I'm raising capital with a few really top tier institutional grade partners. And I live in Costa Rica as well for the majority of the year, and that's really due to real estate. I've been able to bring my family down to Costa Rica, and then we'll go back to Toronto in the summers. So we're here, there, and everywhere, but it is all thanks to real estate. And I think that's why I'm so passionate about it.
Yeah, well, we have so much in common. You snowbird like myself, and then we're in the real estate sales business before, and I think it's a great pedigree to be a capital raiser from. Our friend Ashant obviously has had that world. He's been on the podcast, and several other individuals who got into the sales and then transitioned over to this side of things is really cool. And to your point there, a lot to unpack, but when you are a realtor, it's very tough because you're not really compounding, the incremental sales that you had, the incremental business like a fund manager can there, if you will, right? If you raise, let's say, $10 million in certain structuring, you can have really awesome compounding benefits to that. Not to say that the residential business doesn't have compounding benefits, but stacking and stacking annually can kind of create, years where you're always flipping through deals and kind of recycling capital, raising on top of it. Just a really cool business to be into. And, when it comes to sales, you can only really sell for the most part. You can get a team in place, but where your feet are, right? As opposed to doing what you're doing now, you can be in Canada, you can be in Costa Rica, you can be in Timbuktu, and you can still make it happen so long as you have a Wi-Fi signal. Naturally, used to do residential sales. Now I'm in Oregon basically all summer. And that's a massive benefit that I get being in this world, because so long as I have a Wi-Fi connection and I'm available, I can still do my job to its fullest ability, which is really, really cool. And I think it's something that as you kind of look at your life, you don't take that for granted. And, you maybe leave a little bit of money on the table. You could probably make a really great living, potentially more, doing residential sales. But at the end of the day, what's the money for if you don't really enjoy your life and your day to day to the maximum?
Very well said. And it's true.
Yeah.
And I didn't know you're in Oregon. Oregon's beautiful. So yeah, it's just that ability to be where you want to be, and still you're helping people. You enjoy being client facing. Like, there is so much. And it took me a while to find that exact thing I wanted to do, but fund management is just, it has all those boxes. So well said.
Yeah. And naturally, I would love for you just to talk about before we get into some of like the business stuff that you're raising for and kind of your experience and we look for there. But can you maybe talk about your lifestyle transition of being kind of nomadic and being in Costa Rica and being in Canada? Because quite frankly, I know at Oregon summers and kind of places with this geography of being this north, how amazing your long days are in the summer and whatnot. And then obviously being in Phoenix, how great your winters are. Costa Rica is probably to another level there. But can you kind of talk about what drove that lifestyle choice and what that decision was like for you to maybe help people with their life to realize that they don't have to be stuck in this paradigm of living in the city that they grew up in or anything of that nature?
Yeah, for sure. And it's funny because like when I'm in my town, like there's so many expats and everybody's doing it, but you kind of forget that it is still like a huge step for people to do that, right? To say, wow, I can actually relocate my whole family, start a new life somewhere else. And for us, I've always loved traveling. I kind of was raised, going on really cool trips and seeing the world. And my husband as well, he for 10 years before we were together, he was kind of nomadic as well. He's also a real estate investor, so there was this natural inclination to wanting more. And, we kind of had that kind of mindset of, okay, this is possible. And I think that's the biggest thing for people is the mindset around it of we can actually do this. And there are some logistical aspects to it where like, how are you going to make money when you're abroad? That's one main challenge, and it's changing because of the shifting dynamic of work. But a place like Costa Rica, to be honest, the first thing is for my kids. Like they're outside all the time. We don't have a TV like in our household. I'm not saying that they're like these weird kids who never see a
There's
television.
nothing wrong with iPads and
Yeah,
TVs.
like I have
However, yeah.
nothing. Yeah, I'm not like kind of some like weird, like structurally, like you can't do anything, but there's just like a natural inclination for them to want to do things outdoors because that environment is available. And trust me, when I come back to like Toronto for Christmas and we're at their grandparents' house, like there's a lot of TV and there's a lot of all that going on, but it's because you can't really go outside as much, right? So, down there, the lifestyle is very attractive. There's a lot of high level people there as well who've made that transition and are able to work down there, whether they're in tech or whatever that looks like. So it's an enjoyable lifestyle, like surfing in the morning, hardcore like fun management during the day, on calls all day, doing what I need to do, and then just having family time in the evening. So it's been fun so far.
Many would call that living the dream without a doubt. And I'm very happy that you're able to accomplish that. And the whole thing, it's kind of funny. I equate winters in Arizona is actually the summer because it's just like if it's minus 10 degrees or, sub-zero or whatever that would be Celsius, right? Similarly to that, being in Phoenix, Arizona, pretty brutal when it's 115 to 120 degrees out for months on end. It's basically the same thing. It's air conditioned room to air conditioned room. You're breathing in compressed, air like that. Probably not the best. And I love being outside. I can't be cooped up. I'm a little bit ADD and I need to walk around. So it kind of kills my soul when that's going on. And I don't like sitting around watching TV. So I can really appreciate that perspective there. For me, it's golfing. For you, it's surfing. But, having a hobby to be outside is super awesome. I think it really improves and enriches the soul, which obviously makes you do better, more complete, more fulfilling work, which is awesome. But do you think there's a certain level of kind of, hey, I need to have X amount of dollars or investments coming in, or a certain amount of dollars that you've raised in order to achieve the ability to kind of go abroad? Or is it just if you've got, income coming in from a remote position, it's okay? How would you, if someone was to ask a question like that, how would you answer it? Broadly speaking, obviously it can get more specific and granular depending on the person.
Definitely. And there's so many different people who make it work, right? So, there isn't one way, but I would say the biggest piece is ensuring that you can afford the move. Like it's actually more expensive for us to live in Nosara, Costa Rica than it is for me to live in Toronto, Canada because of the dollar exchange. So that's personally, we're definitely taking a financial hit actually living there, which I think some people are surprised by. They're like, "Oh, you move abroad, it's so you're like living a cheaper lifestyle." And maybe in certain places it is, but not where not where we're at. It's like very very inflated at this point.
Yeah,
Um,
we're not talking about living in Vietnam or Bali or
oh
Thailand,
yeah,
unfortunately. I
yeah.
wish we were. And if we were like where Australia was in relation to Bali, I would probably figure out a way to live there, but that's not a reality because that's on the other side of the world. So,
Yeah, so that's a component. I would say for anybody who's considering it, the biggest piece is yes, like you just want to make sure like you have sustainable income abroad. And I think you can go anywhere. You can make it work, right? Like you can live in our town and have like, the $1 million property, or you can rent and stay a little bit farther out of the town. You know what I mean? There's always a way to figure it out. But definitely for a family considering it is just like long-term income, whether that's, cash flow from a business, the ability to be remote, and then as well like schooling for kids. I know it's not for people who have kids, it's a big deal, and just understanding like the education structure down there. Like for us, there's a lot of great schools in our town, but there's a cost to it. So there's a cost to many things that you may not have back home. And for us, it was our real estate assets have really enabled us to do this because cash flow comes from them. Plus, I'm obviously compounding that through fund management, like commissions and income. So I would say just set up your financial picture, and the rest will kind of flow because there's a lot of great people that have done it, and everybody's willing to help each other, I find.
yeah, well, now that we've shifted people's mindsets and awoken them to a different way to live and a new reality, let's talk about the deals that you've traditionally maybe invested in and then got into the fund management space and wanted to kind of raise capital for.
Yeah, so I definitely, my foundation is still multifamily. I think, no matter what's happened the last few years, there's still a solid basis and foundation. And, the data shows that there's going to be a continued demand for this type of housing, whether that's, more renewals happening, millennials renting for longer or not purchasing at all. And that the mindset around that has shifted a lot, where renting is becoming more of a normal, aspect of living. So I think the foundations long term are still very solid for multifamily, and that's just what I grew up in. So I will always have that as my foundation. Now that being said, when I'm looking at capital raising, I do want to kind of look at it from a lens of diversification for my investors, and maybe I kind of go overboard in the care I'm trying to allocate them into different asset classes or different you know areas in the capital stack, whether that's preferred equity or common equity. But I've definitely transitioned into raising for different deals like energy funds, or right now I'm doing due diligence on a triple net medical fund, so that's like dental offices. So just creating a little bit of opportunity for an investor to come and work with me and say, we have this available and I'm going to allocate you into these deals, but this is also a way for you to diversify through me and my due diligence into other operational teams, so that they can get a taste of a few different areas of commercial, and still have that foundation in multifamily real estate. So a few different things.
Yeah, would that be with Derek Peterson, perhaps?
Which one, the medical one?
Yeah.
No, there's a gentleman, AJ Peak, and yeah, he's doing that. He's pretty successful. He's a big track record in the dental space. So that's where I'm looking right now.
Yeah, that's awesome. And that's a really cool structure to, you know, kind of think about the essentials, right? So let's talk about the essentials. Multifamily, highly essential. Last I checked, we're going to have people going to places to get their teeth cleaned. Pretty important as well, right? So you look at businesses like that, the world is certainly changing. Maybe retail. There's some retail that's going to do really well. There's probably some retail that's obsolete that will work no more. But multifamily, when you talk about that, it is, to your point, such a core thing because shelter is number one. It's like basically, oh, you're not going to bet on food. Oh, people are going to stop eating. Well, I know Ozempic is out and all, but that's not going to change everything, right? So you look at housing; it's 100% essential. And to your point about people and renting a little bit longer, millennials, Gen Z, stuff like that. I think the American dream, I'm not going to say it's dead, but it's shifting. I think a lot of the American dream is, wait, why am I going to strap myself up with a big mortgage? Why am I going to give myself this big liability if I can rent? And if you look right now, the spread of rent to home ownership has never been larger due to where pricing is at and interest rates. You've got so many homes, as you know, that were acquired with sub 4% debt. Well, you're never going to sell these properties, even if the market's kind of in a tough spot right now. Well, it's not tough for you who locked in a payment that doesn't exist anymore. It's cheaper to stay where you are, which is great for the housing market. But if you're a buyer right now, it's going to keep you renting for longer. So that's kind of the thesis for multifamily. Despite how depressed it's been, people are going to be renting for longer because they just don't necessarily want to strap themselves up. And I think the new American dream is financial freedom. And that's by way of maybe creating passive and income, passive investments, having businesses, maybe living in situations or locations that maybe they're leaving some money on the table, but they have a better quality of life. And I think that's what people that were a little bit younger really think about and strive for. And that's kind of what we're able to. And also you look at, affordability, there's obviously a massive crisis there. The stuff that we typically are buying, and I'm sure you're also looking into, is kind of closer to that workforce housing, probably not the A plus latest and greatest product, but maybe a little bit, A minus A or older, which you can't really build for below replacement cost.
Yeah, no, excellent points. And like I was just on a call with one of my investors today who is a millennial. We're a similar age, and he was saying the exact same thing. He's like, why would I purchase right now when I can put my money to work in LP deals, make a pretty solid spread and just rent where I am and create that ability to have more freedom. So completely different conversations happening, which is pretty cool to watch.
Yeah, there's kind of a generational shift going on that, it's not good, it's not bad, it is, if you will. So that's for sure kind of one of the flavors of the week is changing that mindset and understanding where people are putting their dollars and put their time and resources and allocation. So when you do look at deals, right, when someone, obviously you're very active on LinkedIn, you're very active in the fund management space, you've got a great name within it, which means that guess what happens? You get deals that find your inbox perpetually. So let's talk about some of the deals that you're doing, what you're looking for, kind of some fundamentals, things like that. Like what gets you excited?
Yeah, so I mean, honestly, like any inbound requests, I pretty much ignore. I'm a big believer in like, and they may be fine, but I really like to do a lot of work on my end to like source the best opportunities through other, fund managers that I can have conversations with. It's kind of like a whisper network, right? There's a lot of us that are active in this space, but there's a lot of fund managers that like they're maybe not as active. They'll kind of just raise for whatever. But I build relationships with fund managers like Nishan, where we really treat this like a long-term business, and our objective is to bring better deals to our investors they're more highly vetted. So doing thorough due diligence on them in terms of underwriting reviews, police checks, background checks, pretty thorough questions to the sponsors themselves before anything ever gets to an investor. So I would say I turn down a lot more deals than I actually raise for, which to be honest, like hurts my hurts my bottom line. Like I could be raising on deals frequently and making those acquisition fees or due diligence fees, but there's a level of integrity that I think is better if you want to be in the business longer, and just from a care perspective for people's hard-earned money, where I prefer to work with teams that are kind of have a good reputation, they have proof of concept, and the fundamentals as we've been talking about are there, because there are a lot of deals now where, especially with the internet, like things can look super shiny from the outside, but when you actually dig into the underwriting, there's like some pretty intense engineering going on to make those numbers work, and it's actually pretty scary. Like I just, from what I've been seeing lately, deals with like a lot of pref involved ahead of the common equity, pref funds coming out that are just capital calls in disguise, and it does take some discernment to find deals that are like higher quality, that are like with the same level of risk, right? And that's kind of where I'm at right now in deal
Yeah, just
selection.
basically finding the balance of a risk adjusted return. And I couldn't agree with you more there. And, I really love what you said there. And it all comes down to the experience. I mean, A, finding a good deal. And then, for a sponsor, finding a good deal. And then the second item there is delivering a great experience. And a great experience is varying. But, what are some of the experience level things that you're looking for when you are working and trying to vet a fund manager? Because at the end of the day, as you know, you're passive in this situation. You're a fund manager, you're not a co-GP, you're not really making these decisions. So you really are basically deferring your business model and career into the placement of naturally how well that operator does. And different people naturally get different results. Having said that, what are some of the experience levels and minimum deliverables that you're looking for when you are working with sponsors that make you and your investors comfortable?
Yeah, that's a great question. So I would definitely say when you're looking at an underwriting perspective, loan to value and things of that nature, like sub 65% is kind of a range that I've seen with more of the sponsors where I'm comfortable with. And then you want to look at DSCR. Like I've seen deals get sent to me where it's like the DSCR is at like 1 and they're like trying to raise money on. I'm like, whoa, like I don't see how this works in any way, shape, or form. Or like really aggressive cap rate exit assumptions where it's like, that's great, but you're relying on so much like rent growth to have this happen where if there's even any like margin of change over the next few years, which like none of us can like truly predict, right? There's just like not enough room for error. And so it's like the dynamics of the underwriting that I'm looking at. But then it is like conversations with people, like, us talking, you want to also have some soft aspects to it. It's like, who are the people involved? Like, do you get a sense of, what their work ethic is, what their objectives are, what their integrity are? And then as well, then back to like background checks and police checks, is there anything like shady, that you can actually get from that regard? So those are some of the things that I'm looking at. But it does, I would say, at the end of the day, the underwriting is pretty critical. And I know you can kind of manipulate numbers and all that, but at some level, there's a foundational sense you're going to get from the underwriting and then the track record of the team, like how many full cycle deals have they done, what's their experience in the marketplace, are they jumping from like multifamily and suddenly doing BTR in like another state, and it's like, well, that doesn't really demonstrate much knowledge or experience in that asset class, or going from value add to development, like that can be a huge jump. So there's a few different things, and I kind of jumped all over the place, but I'm looking at multiple things to kind of make an objective decision to say, okay, this is something I'm comfortable raising on or bringing investors capital into.
Yeah, that's really smart, and I love that. And the points I'm hearing there, taking away is number one, you don't want to financially engineer a return. You don't want a situation where, hey, yeah, well, this only works if it can sell us for a 4 cap when the market today is at a 5 or 5.5. It's like, well, that's a very large gamble. You basically, the entire value creation is hope, wishing, and wanting on an exit. Where guess what? If a property from maybe a different operator had the same going in cap and there was a business plan there, well, then guess what? If the exit cap was hit on the other deal, and then if it worked on here, well, then you have a grand slam in your hand if that's kind of the exit assumption there. And then the other item to think about is just going forward on these deals, not getting oversold on good marketing, right? Not getting oversold, because unfortunately marketing does work. Salespeople do in fact work. You can really like someone to death, but unfortunately liking them doesn't necessarily give you the result you need. And then the final point, which is operational expertise, and not kind of being a floater and a grift and having a grift there, if you will, in regard to asset classes, in regard to the business plan that you're doing, kind of the hot potatoing from GPing this to that. You never really creating or being an expert in anything, just kind of, going whatever is hot. That's the last thing you want to see. If you're a capital allocator, guess what? The Sarahs of the world, you guys get to choose the assets that make sense in your clients' portfolios. But if you're working with sponsors, you want to work with the individuals that are experts in a couple of locations, probably just doing one or two things only. Probably just one thing in a couple of markets that are, got kind of a footprint there, then, if you will, where they've got economies of scale and synergies, where they actually know what a good deal looks like or what a bad deal looks like. So they actually have discretion from internal data as to what would work or not.
Very well said. Yes. And I know you guys are really good at that. Like at Lone Star, you kind of have a focus on certain markets and just become an expert in that market and in one type of asset, right?
Yeah, I mean, we're looking at this. We want to be in some of the biggest MSAs, and we want to be a 1% owner of the entire market share. Now, that's going to be an ambitious thing to do, but in Houston, we're not actually far off from 1% of market share. I think if we doubled our Houston portfolio, we would have about 1% of the units in Houston. Dallas, we're slowly building that up, but from that, we get better insurance rates. We understand the pockets that we want to buy, and we understand where a deal could go well, a deal could go south. We understand in that market, hey, well, when you look at the underwriting, here's where you can cut costs. Here's where you need to increase costs. If you have not done that before, if you're kind of floating from property location to location, you're not going to understand with very good certainty how you can increase or decrease expenses, which obviously is the nitty gritty part of the underwriting, and how you really kind of help expense ratios and stuff like that to really qualify a deal to the max. That said, you're obviously, incorporating stuff like the energy funds. Are you also maybe doing private credit as well and opportunities like that with the people at Aspen potentially?
Yeah, for sure. And so I think that's a really good thing to kind of bring in. Thank you for like, bringing up the deals I'm doing here.
Yeah,
But yeah, private credit,
talk
another
your book.
yeah, the other portion of kind of like that diversification strategy that I was mentioning is, there's aspects of a portfolio where you can kind of have a different area in the capital stack, which would be like private credit is kind of this like really unsexy, kind of plain, your nice steady returns, reliable cash flow, and you have more security of your capital as an investor. And it doesn't have the shiniest IRRs, but it's just allowing an investor to come into my world and my ecosystem, and I'll say, okay, we've allocated you into, let's say, an energy fund where you have the potential for very high returns, right? There's more of a risk here, but like let's allocate you into something that is like very secure and steady. Of course, there's risk to any of this. I'm going to highlight that this is still investing, and I always tell investors it's just like investing in a stock, investing in a business. There is risk to all investing, right? But if we can kind of get into things like private credit, where you're essentially becoming a lender on properties, you're not acquiring them, and you're getting takeover rights if those fees don't get paid. Like there's a lot of dynamics there that make the capital more secure. Then it's nice for an investor to have that in addition to maybe like an upside deal, in addition to like a kind of more stable value add multifamily. So working on a few different things, but it's nice like to have that mix, right? In my opinion, that's how I like to run my business.
Yeah, no, I agree. Like, there's sometimes I get jealous because, quite frankly, right now, I mean, we send you any deal we have, but guess what? There's no deals to send right now just because the multifamily world's a little bit slow. But as a fund manager, you kind of get to pick the soup of the day, the soup du jour, like whatever is making sense, however there's value to be created, you get the opportunity to kind of present that to your people. And right now, the flavor is kind of hard money, debt investments, private credit stuff, oil and gas stuff's pretty interesting. As you mentioned, the triple net plays. I mean, like a triple net roll up play makes a lot of sense. So a lot of really cool angles that you can do that I'm jealous of that you can put capital to. And then also there's some cool things about, from a fund manager perspective, if you're a capital raiser listening to this, some of this private credit, some of those oil funds can actually pay you along the way, which is really nice. One of the unfun things about the multifamily world, just admittedly, because it is such a great asset, because it is such a in-demand asset, the returns can be a little bit lower because there is such a fluid and liquid market there, right? But the downside also to that is, okay, although you have the upside there, the downside is there's not that much capital to be distributed to the fund manager on a monthly ongoing basis. This doesn't really help me to talk about this, but if you do, just to be transparent here, I want to keep it honest with everyone. If you are a fund manager, you probably do have to allocate some of your resources into in investments, not just from a selfish perspective, but to your investors, to also have something where there's a little bit more cash flow and current pay that can help you pay your bills along the way, which some of these other asset classes can in fact do, which is super cool. Because in the multifamily world, you get the upfront acquisition, maybe you do a little bit of asset management, dollars under management fee, and then a lion's share of the quality and the equities built on the back end off the sell of the deal. So how well you buy is very, very important.
Yeah, very well said. Yeah, because a lot of the times, just the AUM fees, they're just paying fund expenses, right? Like it's not like you're really making this massive amount of capital along the way. So the diversification comes back to you, as you said. Now it's not just your investors.
Yeah, no, it's really important to think about how you right size your business and how you can kind of, get in this capital raising world. If you are a fund manager, just some free game here. I mean, reach out to Sarah and she can tell you exactly how she made her life work. But if you're a fundraiser, a capital allocator, and you're looking to live nomadically or kind of get out of your W-2 position or figure out a way to do this sustainably speaking, there's a recipe and a blueprint that, is not 100% reliant upon you needing exits on a 5-year, 7-year time horizon. I mean, that's very speculative, but to get paid a little bit along the way can be really helpful for those bills and expenses for your lifestyle to be kind of paid for. So just want to make sure that if anyone's a fund manager listening to this, you know that there's options out there that can help you make a more stable and sturdy career in this and not just kind of be in and out of it, if you will. That said, it's no secret, as we wrap up here, what is kind of your outlook? What's kind of getting you nervous about the market and kind of the economy currently? And then on the flip side, let's be positive. What's getting you excited? But let's start on the negative first. What's kind of keeping you up at night or getting you a little bit scared?
So like I wouldn't say this is negative because I personally I like Trump, but there's just like a little bit of a wild card play it seems, with everything going on like politically, right? You just there's economic risk involved. Same when you saw interest rates go up, where there's certain things you almost like can't answer when you see the things that are going on with tariffs and like what direction that's gonna take in the marketplace. Is it gonna have a huge shift or not? So I'd say like economic risk is always there, and we do have a little bit of a wild card going on over the next few years. So I wouldn't say it's fully negative, but something to pay attention to, especially in terms of like deal selection, and just looking at the numbers of how the kind of market shift and appreciation of assets and things of that nature. But positives, I would say, is like there are so many good opportunities out there and so many great people to work with, and I know firsthand it takes a lot of work. Like fund management is a full-time role. Like we're not just, if you're taking it seriously, you're not just raising for anything. I really have to put a lot of time and effort into finding high quality partners, and high quality deals to bring to my investors. But it's also so amazing that there is so much opportunity out there, and you're earning, it's the same thing as from real estate sales. Like you don't have a cap to what you can earn if you're willing to work hard and put in the effort there and allow yourself to grow the business over time, right? Like don't expect to get rich in a year, but if I project like 5 or 6 years out with all these deals that I'm stacking up, like that's going to look pretty good, even if some of them don't go like 10x, right? So I think there's a lot of opportunity if you're willing to do the work to find it. So that's kind of my positive spin on things.
No, I love that, and that's very true. Obviously, we're probably pro Trump here. Naturally, I think 100% bonus appreciation at this point, by the time this release should be passed through, which is very encouraging and exciting for the
Very
business.
exciting.
Those are big tailwinds that we frankly need, which is awesome. But the downside is, the tariff, kind of conversation there, if you will. Like it or not, I don't have a fully formed opinion of that yet because it's too soon, but you can't deny what it's doing to treasury volatility and the potential of rates getting cut or not getting cut there, if you will. Obviously, there's more to it than just that. This is a massive macro conversation. It's not micro. You can't only look at one thing, but it's certainly unfortunate there. But obviously, times like this create really good opportunities, and I'm very happy that you've been able to successfully navigate finding good people in the business. I mean, with that said, if someone's kind of getting into the world too, I didn't even think about this question now, but you've been able to navigate this quite well. You're very social. How does someone navigate good partners, find good opportunities, and go through that process and route?
Yeah, it definitely takes putting yourself out there. And I'm from Canada. So, like, I've kind of had to transition from a complete different country and meet all my partnerships, all my investors. Everything is now US based just because I personally invested in the US. There's a lot more opportunity there from my perspective. So, kind of in the business world of the US now. But I would say it honestly just takes. Putting yourself out there, going to conferences, meeting other fund managers. I think that's really valuable, and I think that's like underrated. Is I'll have a few calls a week with other fund managers, and I'll just reach out to them and I'll say like, what are you working on? Who do you love working with? And that's how I find a lot of deal flow. So I would say it does take putting yourself out there. And I'm actually like, I can be social, but then I just go like hide in a dark room after, right? Like it's work to do it. But I think that's a good recommendation. And then just like perfect your process at the same time while you're finding new deal flow. Really learn the nuances of underwriting and vetting the deals that you are bringing, because that's going to affect your future income. It's also going to affect your investors and your longevity of your relationships, if you're getting into better deals. So yeah, there's a lot to it, but everything just takes effort,
Yeah, and
basically.
this is a massive PSA. Who you work with will determine how long you'll be in this business. And if you elect to work with a group who's maybe new, God bless you. You could be doing something really sweet, but you could also be taking a very massive career risk there, if you will. If they don't have got the right infrastructure or team in place or they can't raise, you could be out of the business quicker than you're in it. So just be very wary of that process. And it's kind of times right now, frankly, where the pigs are getting fatter and fatter because those groups who are well poised and positioned, kind of groups like Lone Star, are able to attract individuals who are working with other operators that are not being very successful because we haven't made any capital calls to this point. We don't plan to. It could happen. I don't think it will happen, but we've been very fortunate and stable within our portfolio to grow. And a lot of people putting out fires, we're able to look forward, and groups like us and other people in the space are really able to absorb and soak up more market share. So we're really blessed and fortunate to have that that be our circumstance at the moment. We don't want to see anyone lose money, but unfortunately, that's the nature of cycles. That said, though, Sarah, how can people reach out to you if they want to find you, email you, kind of connect with you on a more personal level from the show?
Yeah, so I'm pretty like active on LinkedIn.
I'd say so.
As you know, that's kind of like my bread and butter. I love LinkedIn. I love meeting people there. So yeah, people can just connect with me on there. They can DM me. I'm always happy to kind of support, fund managers or have conversations. So number one way, LinkedIn.
Very cool. Awesome. Any email you can share with people as well?
Yeah, for sure. So Sarah, my name with an H, at Hylee, Hylee, which is my two kids' names put together. Very original. HyleeCapital.com.
Very cool. Sarah, thank you so much for your time today. For the listeners that are here, we appreciate you, and we'll see you next week.